Thank you so much, everyone, for joining. We're thrilled to have you here. So I've been excited to start talking about this topic. It's something that I shared that I was hoping that our organization, Crowdfunding Professional Association, would focus on in the coming year. um, you know, to be effective, to really move money into all of the things that we need to see funded in our world, we need lots of really good partnerships and relationships. And one of the partnerships that I've been talking about for a while since I've been president of Crowdfunding Professional Association is partnerships with with community development financial institutions. But I'm sure a lot of folks who are here know what those are, CDFIs, but we'll be talking a little bit more about what CDFIs are. Um, but just, the basic concept is they are financial institutions that are certified by the Department of Treasury, and they are committed to ensuring that there is funding flowing to communities that need to, that are under resourced and need community development. And they're very diverse. There's many different kinds of CDFIs. And their goal and their mission is very similar to what I would say is the mission of crowdfunding. Crowdfunding is designed to get funding, patient supportive funding, right fit funding into the hands of businesses that are doing good in their communities and often don't have access to more mainstream sources of capital, like banks or venture capital funds and that sort of thing. So I think it's an exciting thing to explore how the two worlds, I mean, there's a major ecosystem of CDFIs and there's a major ecosystem of crowdfunding, and I'm excited to explore how those two can work together. So I was able to get Yuliya Tarasava to join us from CNote, and I immediately thought of CNote when I was trying to think of creative ways that crowdfunding and CDFIs can work together, because CNote did something very innovative, which is to use crowdfunding to make it easier for everyone to invest in CDFIs. So that's one example of how the two worlds can work together. There are other examples as well. I wanted to share that there is a small but growing movement in the world of CDFIs for CDFIs to help their potential borrowers to use crowdfunding as a way to bring in equity that can be used to leverage the CDFI loan. So there's a couple of examples of that that I'm aware of. One is Spring Harvest Co-op in Massachusetts, which is a hydroponic greenhouse that raised 400,000 using crowdfunding, and that enabled them to do a $2.7 million project with an investment from a CDFI. Democracy Brewing in Boston raised 370,000 using crowdfunding, and that leveraged a $3.5 million project. So that's also a really exciting way that we can be working together. So this is just the beginning of the conversation, and we definitely want to hear from those of you who have experience in crowdfunding and or CDFIs about your creative ideas about how the two worlds can support each other. And we do have someone who just joined our board of directors who's very active in the CDFI world. So there will be lots of opportunities to have those conversations. So that's my introduction, but let's hear from Yuliya. So Yuliya, tell us about you, how you came to co-found CNote, and what CNote is all about.
Yeah, thank you so much, Jenny, for having us and hosting the webinar to the association. So I would just start sharing that I'm an immigrant to the United States. I actually come from Eastern Europe, Belarus, and my interest was always around finance and understanding how finance can be a tool for change. I consider myself a math nerd, and I'm a finance nerd, and I literally can spend like days just thinking about different financial products and how we redesign them to be more inclusive and to be more in line with the needs of communities that we all care about. And so I came to the United States. I had a pleasure and opportunity to work on Wall Street and definitely learned a lot on how traditional financial system is built, worked, kind of pluses and minuses. And then at some point in my career, I decided that I want to bring those financial skills into impact investing, community development space. I started working with an institution called Acumen Fund. Some of you might be familiar. It's a very prominent fund in the impact investing space, and with them, worked on different projects in Africa, and then eventually, I think having that experience, and I always say, like when you can see how your skills and your knowledge and your experience can actually change people's life, you cannot unseen that. And so then after that experience, I was looking to find ways to continue on that journey. And that's kind of like sparked that idea for CNote. And so CNote was founded in 2017 by myself and my wonderful co-founder, Catherine Berman. We both come from traditional financial field, both bring quite different experiences into the company. But the idea has been, how can we use financial innovation to close the wealth gap? There was realization that traditional financial system might not be exactly designed to serve everyone in an equal, fair, and just way. And so a lot of it was around how can we redesign it, reallocate the capital, be more thoughtful of how the capital is being allocated to really close or attempt to close the wealth gap in the communities. And right now, what CNote has evolved into, and as you can imagine, it's been a journey, it's been a process. We started about 10 years ago, and as any company, we've been trying to listen to the market, to understand what dynamics are happening, how it influences community development space. And so where we are right now is we enable individuals and institutions to efficiently invest locally at scale via fixed income products or depository solutions. And the goal is, all the capital that is being deployed as via fixed income or via depository solutions, really focused on economic equality, financial inclusion, climate change initiatives. So it's very much connecting to the values, right, that organizations or individuals can have and want to express by placing the dollars. And then we really leverage the technology to do that, and those like new regulatory frameworks that we're going to talk about it, right, to get us there. And then how we measure impact is we have quite sophisticated system that we work with our CDFIs to understand how many jobs were created, how many jobs were maintained, how many small businesses have been funded, how many business units, how many affordable housing units have been built. So it's not just about the transaction and just driving the capital, but also like getting that feedback loop of what's working, what's not working, and what are additional needs that might be appearing that we would like to support.
I love it. So basically, people invest in CNote and then CNote invest those funds into. I noticed that on your website, you call it community, or somewhere I read you call it community finance organizations. And I guess CDFIs are like a subset of that. So tell us a little more about what is a community finance organization? What is a CDFI? Why
Yeah.
are these important?
Yeah, of course. Yeah. So again, when you go back to this mission that we had of like closing wealth gap, right? And again, driving more capital into underserved communities, there's different ways to do that, right? I think for us, what was really important is to leverage the tools and to leverage their pipes, quote unquote, that work, right? And I think what's interesting about CDFIs is that many of us might not know about them, just like from like a day-to-day experience, but they've been around forever, right? And the first kind of like idea behind driving more capital into underserved communities came with Community Reinvestment Act in 1977, and then in 1994, Regal Act like officially established CDFI fund, and from there the whole movement of CDFIs have really started, right? And right now there's 1,500 CDFIs out there. And I think, Jenny, you referred to it. There could be loan funds, there could be credit unions, there could be banks, and even venture funds, right? There's venture funds that actually are CDFIs because they have this intention to provide not just loan fund capital to CDFI to projects, on the ground, but also equity capital, because again, there's different type of capital that are needed to drive to contribute to community development. And yeah, and so we talk about when we were thinking about how to facilitate this capital deployment, CDFIs just became like a very natural partners, right? It's like, why we would reinvent something that already working. CDFIs have, I think what's so cool about CDFIs is that they have amazing trust in the communities, right? They first go there as a technical assistance organizations and the nonprofits, as someone who's been working with communities for a really long time before they might even get to the point where they actually start investing and lending and doing some other, capital transactions. And so what was really an aha moment for us is like, there's this whole like trustful system that is already working, that is already in place, that already, know the needs of the community so well. So why don't we just leverage that? And so that's why, again, working in partner with CDFIs, and you talk about partnerships, right? Like how important they are, which is like a no-brainer. And then from there, we did expand, like now we are not limited just working with CDFIs because, there's other wonderful institutions out there that are very focused on community and community development, but for whatever reason, CDFI certification might not be the best path for them, right? And again, there's different reasons for that. And so, but we want to make sure that we also have opportunities to work with these partners. And so we internally develop our own framework and how we evaluate partners, how we understand what the work that they do, so we can continue expand the universe of community organizations that we work with, again, to like, amplify the capital that can be deployed in those communities in need.
I love it. So it's from what I understand, most CDFIs, regular folks can't really invest in them. There isn't really a way that someone can put money into a CDFI unless maybe it's a CDFI bank, like
Mhm.
a retail bank. So what you felt, it seems like, because of what you did, was that it was important to give regular folks the opportunity to invest in a broad array of these types of institutions. So, that's not an easy thing to do. Why did you and your co-founder feel that it was important to open up the opportunity to everyone to make these kinds of investments?
Yeah. So there's a few things. You are right that there is CDFIs, banks, and credit unions out there, and I honestly very much encourage everyone to start there, right? Because there's, and maybe we can offer later some resources, but you could be looking up and seeing, hey, is that credit union around the corner? Is it actually CDFI? And learning about their work and really moving your cash in there, right? And just saying, hey, now my cash, my checking account, my saving account is with that CDFI credit union, and that's who serves my community. That's who contribute to the health, right, of my community. And there's also CDFI banks out there. The interesting thing about credit unions and banks, right, again, because they have these depository sources, then they can rely on that to actually deploy it out as an investments in their communities as loans, and actually help to build schools, help to build health clinics, help to build community facilities, help to build, finance small businesses, and et cetera. The thing about loan funds is like they don't have that depository part, right? So like loan fund is focused on giving, but they obviously need to find resources, right? The capital to attract before they can lend it out. And so that was an interesting thing for us to explore, is like, okay, well, they don't have that natural source of capital coming to them. Historically, loan funds had been financed by local community foundations, or again, banks that are being driven by CRA, rating, or by the CRA work that they have to do. Maybe there's some local governments initiatives, right, that support CDFIs. But again, CDFIs, to your point, it hasn't been really offered as a tool for investment for institutional investors, honestly, or retail investors. We've seen individuals engaging with CDFI loan funds more as a donation, as a charity, right? So you can go on the website of your local CDFI and probably contribute to them as a nonprofit. But it never really been like, wouldn't it be wonderful to have CDFI as a fixed income, right? As a part of my like fixed income portion of my investment. So when I know that, let's say we go for 60-40 approach, right? That part of that 40 approach is actually in the CDFIs. And why I think it's a really interesting concept is because, we all love living in a safe, healthy, clean, prosperous communities, right? And we choose to buy houses there, and we choose to send our kids to school there, and we choose to shop there because, again, we want to support that ecosystem. And, we see that movement of investing in CDFIs has been a part of that, right? Because like when you invest CDFIs, now the CDFIs can invest in those small businesses, can build those schools, can build those hospitals, can build more affordable housing. So your money becomes not just like where you spend the money, but also when you invest your money becomes that tool for change. And we like to say there's like, let's vote with our dollars, right? Like where you shop, it's a way to vote, and it's a way to express, right, like your opinion. And investment is a similar way, right? Or donations a similar way. So it's kind of like expanding the toolbox for people to really be more empowered to do more with their dollars, and also showing that that could be a recyclable way, right? Because again, the idea when you invest, and we can talk a little bit more about what exactly we did with our flagship fund, but the idea is that when you invest in CDFIs, you are getting the return and you're also getting your money back, right? So it can be recycled again and again and again, rather than, when you feel like when you put $100 a charity, it's done, right? Like it's gone.
Yeah. Yeah, and I remember when I was first talking to you and your co-founder, Kat Berman, about like how you were going to do this.
Mhm.
And we were talking about these tools that are available under, the 2012 Jobs Act. So,
Yep.
the 2012 Jobs Act, created two crowdfunding options. One is regulation crowdfunding. Back then, you could only raise up to 1 million, which
Mhm.
was kind of small considering what you were trying to do. And then they completely changed Regulation A, because in the past you could only raise up to 5 million with Regulation A. But under the 2012 Jobs Act, they increased it. I think back then it was to 50 million. Now it's up to 75 million. And so it was quite new when you were first starting out, but you decided to go ahead and use Regulation A. We sometimes call it Regulation A plus, which is the tool that allows you to more easily raise from any state. So tell us about like how you went about deciding to use Regulation A plus, what the process was like, how long it took you. Did people think you were crazy to use Regulation A plus for something like this?
Yeah. We like to say, my co-founder and I, we like to say that we like to do things that people think we're crazy because we are crazy. I think all the entrepreneurs that began this entrepreneurship journey are crazy in some way or another, right? And have this idealistic dreams to change the world. Yeah, so I think for us, when we started on this journey, we had this idea, not just drive more capital into underserved communities, but also doing it in a very democratized way. Again, the idea was when I was working on Wall Street, when my partner was working on Wall Street, we've definitely seen that often only people above certain income level, right, or above certain wealth level could afford get engaged in this like really interesting investment opportunities, right? And it also did not feel fair. And so we felt like, okay, like if they're going to be working on creating more justice, right, on that side, it would be great to actually, right, create something as a product that everyone can invest. And so that's kind of like the journey that we stepped on. And again, just the time aligned, right? That when the act was became kind of like a more known, and we started considering it as a tool to create a product that would represent a diversified portfolio of CDFIs of CDFI investments that you can invest just like as a one note, as in one investment. You don't have to have 30 different notes for 30 different CDFIs, but it's one note. It gives you an exposure to 30 different CDFIs. I like to almost talk about it as like as an ETF of CDFIs, right? It's kind of like this like a mini version and mini ETF of CDFIs. And what was really interesting is actually that design process, right? Because we were creating a new product. The product was not done before. We also knew that a lot of the people are not even familiar with CDFIs. But the ones that are familiar with CDFIs, there's definitely been some hurdles and blockers, maybe like why they were not engaging with CDFIs, or maybe the perception that they had, right? And the perception would be, oh, like CDFIs, typically when you invest in CDFI, it has to be a longer term. It has to be a 5 years or 10 years, right? Or when you invest in CDFI, there's like that you have to sacrifice your return, right? And you have to take, below market rate return. Or when you invest in CDFIs, you kind of like, you have no idea what happened with these dollars, right? Or the account opening process is just like so complicated. There's all this paperwork and et cetera. Or I don't even know where to find them and who they are and what they do. And so we've done tons of market research, talking to tons of different people to really understand is like, okay, look, if you're going to create that, what it should look like. And it was really fun. And I think a lot of the features that now we have, what we call flagship, right? So flagship fund is actually that note that represents the portfolio of CDFIs. It has really interesting features. Like it has 30 months as a term, and that 30 months as a term felt by talking to the clients, to individual investors, and by talking to CDFIs, it felt like, okay, that's actually enough time where, on the investor side, it feels comfortable, but also on the CDFI side, it feels like it's enough time for them to actually invest and create an impact, and then, to potentially recycle, in the new term, as a new investment. And then we talked about like, well, but what if someone has an emergency and they actually need to liquidate, right? What type of liquidation opportunities and features, like we can offer to that product? What rate feels right on both sides, because we are becoming kind of like this like matchmaking on both sides to understand what rate would be attractive enough and what rate, CDFI loan funds can still take on and continue creating the impact, and what rate, the individual investors would feel comfortable with to actually reallocate, right, some portion of their fixed income portfolio into CDFI note. So it was again for me as someone who is a finance nerd and a math nerd, it was a fantastic time, just because again you really get to talk to people, you really get to design something that has so much intention and using the best of like behavioral finance, theory and etc. And so yeah, so we knew kind of like what the product should look like, and it was also very important for us to go with pretty much no minimum. The regulation does not allow no minimum, so we went with $1 minimum. So we actually have a $1 minimum. But then we started the process with SEC, right? So we started the conversations, we introduced this idea to SEC, we kind of like walked them through this concept. We walked them through like, again, why we wanted to do certain things. And there was a lot of back and forth, right? There was a lot of like, this is we think is going to work, this is we think is not going to work. Obviously, from SEC perspective, they're all about mitigating the risk and managing the risk for investors and making sure that that's all been fairly disclosed and properly disclosed and in the language that investors would understand. And also, it was amazing to even educate SEC about CDFIs. Like they might have heard about it, but never got a chance to work with them. And so when we were thinking about the risks, right, and explaining to investors the risk of this product, we had to educate SEC about, their risks, because again, that was something that they've never done before, and there's something that haven't, had exposure with before. So, so it took us probably close to 12 months to actually get that whole process since we started. We worked with, obviously, legal counsels, right? We worked with other partners, with a lot of CDFI helps to, again, like really go back and forth on the design and what they can support. And then we eventually launch the product, and flagship fund right now, again, representing that diversified portfolio of CDFIs. It has two flavors. It has a Reg A flavor, which is available to non-accredited investors, and it has a Reg D flavor that, available to accredited investors. And, people can invest as small as $1 and as high as millions of dollars. Yeah, and so it's a 30 months term, it's a quarterly liquidity, it's a market rate return, and it gives you an exposure to diversified pool of CDFIs that do work around the country.
So, okay, so when you did that first filing with the SEC and it took about 12 months going back and forth, educating them, they obviously review the disclosure document that the investors are supposed to read to understand what they're getting into. Well, first, let me ask you this. If you're willing to share, what would you say the total cost was to get that initial approval from the SEC, including like the accounting costs? I assume you had to do like an audit.
Yeah, I don't remember the exact number. The good news is all public, right? So we can definitely follow up, or again, anyone who's interested, they could go to the original filing. And I think this is actually like a really important point when you bring up and just thinking about how to evaluate kind of like a cost and benefits of that. Um, I think the thing that maybe is not being spoken enough is that it's not only that original cost or initial cost to again have a legal counsel, right, who understands Reg A. I think at that time when we started working on that, there was actually not that many legal firms that were involved, right? Just because it was just so new and fresh. And so we were almost like, doing this learning together, right? And kind of like processing what SEC's feedback has been and how to respond and et cetera. And so at that time, again, it was a very intense work on the legal side, just because, again, it wasn't done before. I think right now it's much more like well-paved paths, and there's definitely many more legal counsels that feel comfortable with that concept. At that time, back in 2017, it was very novel. And then there is audit work that had to happen. And then also another thing that I think quite unique for CNote is that we also made a very explicit decision to go in all the states. Often when CDFIs offer the notes, even if they go that route of offering the notes, they try to keep their notes within, neighboring states because they feel fairly so, right, that this is probably where the interest is going to be primarily coming from. For us, because we were showing that you can invest in CDFIs nationwide, it was important to give access to everyone to invest. And interesting thing about Reg A is that yes, you might not need to go through a state review, if you do Reg A, I think it's called type 2, but or tier 2, but you still have to do the filings. And that filings is still tedious, it's still money, it's still time, it's still understanding, like what is that filing process for every single state. And so I think that's, and then there's maintenance, right? And so now after we file, you technically go through like a mini SEC review every single year, and you're filing your financials twice a year, and then you're doing that mini SEC review every single year. And then there's also that, right, annual filings with states. So I think that the thing that I would encourage people to consider, or like to keep in mind when they're considering Reg A, is evaluating, right, the whole timeline, and making sure that that's maintenance and upkeep cost is being taken into account.
Yes, I'm so glad you mentioned that because yes, even though tier 2, also known as Reg A plus, um, you don't have to do the substantive state review. There still are these state notice filings. And I believe you have to file those before you can offer in that state.
Well, this is where the concept of United States being so many different states and almost like so many different governments in one. Every single state has such a different rules around it, and so again, even understanding what those rules are and staying right up to date with those rules are really again requires a lot of time and effort. And so you're right, for some of those states it's like it has to be done before, some of the states is like within 15 days after, right? And so it's constantly that managing of like what needs to happen for each state.
Yeah. Now that we're talking, and I'm embarrassed that I'm just remembering this now, but did you at all talk to RSF Social Finance about their experience? Because I don't know if folks know this. And I should have invited someone from RSF Social Finance on this webinar because they are also a CDFI, I believe. And they also did crowdfunding, but years before the Jobs Act.
Wow.
So and the way they were able to do that is because they're a nonprofit, they were exempt under the 1933 Act
Mhm.
under federal law. However, they still did have to do state by state filings, and for them they actually had to do substantive review because there was no exemption from substantive review. So I don't know if anyone on the call like has ever invested in the RSF. I think it's called Social Impact Note. Um, so
Yeah.
they were real pioneers. There's also another CDFI now that I'm remembering it that also did that. But I think they only offered theirs in California. So there's an amazing history of CDFIs wanting to allow everyone to invest. But I think CNote is unique in the sense that you're pooling funds and allocating those funds to a portfolio of CDFIs, which is really, really innovative.
Yeah.
So how much have people invested over the years in the flagship fund?
Yeah, so we've seen it changes from year to year, and as we mentioned, we've definitely seen investors using it as a proper saving tool, right? Because again, we do allow for that quarterly liquidity, and so we do have people saving it for the house or saving it for the car, which is kind of cool, right? Again, like you know that the money is there, and you know that you still want to make an impact with this money, but you also would need to withdraw it at some point. And so historically, like the transaction volume change on the platform. I think right now we have about maybe 10 million in a Reg A plus. But that definitely like shifted over time. And it's also interesting to watch who is like the age, right? Or the gender or geography is kind of like who is actually coming and who is interested in this type of products. And we've definitely seen kind of like I think the bell curve where well, I guess the reverse bell curve almost, like you definitely have seen younger folks to be more interested in something, even though they might only be bringing $10, and we literally see sometimes people just like send in $10 every single month. And it's again like it's like it's not a lot, but I think it's just like it's an interesting concept where like people are just like training themselves, right? Like this is what's going to be my tool for savings. And then we definitely have some older generation who is really thinking about it kind of like as a saving, right? As a saving opportunity, kind of like creating that legacy and, having their savings in something that actually creates impact for the next generation.
And so unlike with regulation crowdfunding, there's no requirement to use any kind of third-party platform for folks to be able to invest. So how do people invest? Do you have how easy it is, can you just go online and click a button? How does that work?
Yeah, exactly. We had to build it on our own. And again, at that time, talking about 10 years ago, it's been quite novel. And so we've been looking at different ways to partner with someone, right? Or to bring someone whose platform we can be actually using. And then we eventually decided to build our own. And so yeah, so right now the way you're going to invest is you're going to mycnote.com, you're clicking, I want to open an account. We are sending you through KYC and ML. That's obviously the requirement that we have to do. And again, it's described in our SEC document. So we are partnering with someone to help us on KYC and ML, but it's pretty seamless process. It's all integrated via APIs. And then you express, the amount that you want to invest. And again, this is part of the design processes. We are, kind of like we have this concept called batching, right? Where we actually batching the funds to reach a certain level. So then we can invest it kind of like as a one loan to a CDFI. Again, it's very much described in there. in our offering, in our prospectus, and that was like a part of that design process to really get all the parties comfortable on how the money is gonna flow, because it introduced risk, but it's also obviously introduced opportunities, and it has to be simplified for both the clients, investors, as well as for CDFIs. But yeah, come on the platform, create an account, express the commitment, and then you're connecting your bank accounts. I think we're all pretty comfortable right now, right, using Plaid and Yodlee. And then your account is being connected, and then the funds are being pulled from your account, being invested. And then if you do want to submit the withdrawal, you can submit the withdrawal. If you want to do a rollover after 30 months, you can do that. If you want to receive your interest versus accrue your interest, right? There's just like kind of like all the basic features that are available on the platform. And then the cool things that too, which is we haven't really talked about it, but we as I mentioned, we are collecting all this data, right? And so you can actually come on your platform and read the stories and see the data and understand, like this is the type of businesses, this is the type of projects that your dollars get to support, and see the real faces, and again, read about them and see the numbers, right? Again, how many small businesses have been supported, how many affordable housing unions has been built. And so it just kind of like brings you closer, right, to the impact that those dollars are making for you.
Got it. So you have a partner that does the compliance in terms of know your investor and anti-money laundering. Does CNote itself have to have any kind of licenses or anything like that to be able to hold the money the way that you do and then turn around and invest it?
Yeah, so we don't really hold, this was the big deal. We don't really hold the money. Again, we really look at ourselves, and this is how we've been looked at, is like we're really very much like a matching platform. So like we would identify, like CDFIs that want to receive this, this capital. And then, right, we identify the investors that are interested in this opportunity, and then CNote is providing the technology for that match to happen, right? And so that transaction facilitation or KYC and ML facilitation, that's all under this umbrella of, matching platform, but we are not an investment advisor, we're not an investment company, we are not touching, we're not really touching the funds. It really goes from, the clients to the CDFIs when the match happens.
I see. Okay. So it's not an investment fund. It's the technology to match the money
Right,
with the investment opportunity.
right.
And let's see, what was I going to ask you? Oh, so who pays CNote?
So we take the spread and the transaction, and the transaction volume, which is pretty common for the platform behavior, for servicing those.
Got it. Okay. So I know that it's been a while since you did your initial Reg A offering, and things have gotten easier. We do now have lawyers and other service providers that have gotten much better at going through the Reg A process. But if you were to give advice to someone who wants to raise money under Reg A, you've already given some, but any other advice you would give to someone who wants to raise money under Reg A?
Um, we and maybe concerning to CDFIs, it's been really interesting that now that CDFIs have been a part of our experience, like where they've been a part of our portfolio and having received the funds via that new vehicle that is flagship fund. We also have had multiple conversations with CDFIs around, should we do it ourselves, right? Like, should we actually go through the process of doing this? And we are happy to share our experiences, and we also tend to, again, given our experiences, tend to ask our questions around, like, have you really evaluated, how big that can go? Like, do you actually have large enough followers right now in terms of someone who's giving you donations, right? That you feel like you can go back and tap into it. Have you have you again considered what the original cost is going to be, and what's the follow-up cost is going to be? Again, because of you might be nonprofit, like, have you actually looked into like different exceptions, and are you actually going to introduce kind of like new hurdles, right, and new blocks that you would need to be aware of by going through this. So I think I think there's what we've seen this. I think there's been a lot of excitement about it, which is, again, it's a wonderful tool, and I think it's wonderful for us to consider that's out there. I think I would just like probably encourage people to start with like, why am I doing this and what the success looks like, right? And really start probably with just like that, as simple as we need to assess the market, right? And just to see how large I can go and how much money I'm really intending to raise. And if I'm intending to raise $10 million, well, let's work backwards and understand again how the numbers should look to make that $10 million worth. And if there is a cheaper way, right, to get those dollars. Because I think what people might get excited is that, when they think about using Reg A and maybe raising equity dollars and et cetera, it's almost like comes like, oh, like it's just going to be a free money, but it's not really free money, because again, the cost that goes into raising those money via Reg A and then maintaining it's gonna cost something. And so like then understanding about like what is actually that cost in basis points. I think we need to be educating people more and also like encouraging people to do more of that work upfront. So then they're just not stuck with something and have this like idle cost that then eventually will go to waste if you don't do that homework.
Yeah, and so there's so much competition right now. There's so many fintechs out there, some of which advertise themselves as being socially responsible. So it seems like it might be hard for CNote to, get noticed with all these, some of these fintechs have huge marketing budgets because they have VC investors that are willing to let them, really lose money for a while so they can really invest in client acquisition. So how do you really rise above the noise and differentiate yourself from all the other places people are being told to put their money?
Yeah. It's interesting. I think we're still seeing fixed income and cash has been a space that there's been new entrants, and I think there's been, attempts, but I don't know if that space is well penetrated. Because again, I think fixed income, it's really hard. Like when you really think about it, like it is to create impact in fixed income. I think we still see a lot of institutional investors are trying to get there through I don't know, municipal bonds or Fannie and Freddie, bonds, just kind of like as an exposure to affordable housing. I mean, there's definitely people trying to do Kiva, and there's, CCM notes, and there's RSF notes, and there's, Culvert notes, right? There's definitely notes out there that have or can give people exposure to social impact. I think what's unique about CNote is that really intentional focus on that local economy, that local communities, again, job growth, financial inclusion, kind of like all these things that are very United States, local community, neighborhood connected, but also at the same time, it's large enough where you're not just limited by your state, right? Where you're like, hey, like I can only do this, I can only invest in Massachusetts if I'm in Massachusetts. You can actually, we could be tapping into CDFIs across the nation, but we also could be tapping into investors across the nation. And if investors don't really care about geographies, but really say, hey, I just want my money to go where the money is needed most, flagship fund is a perfect example for that, because that's how we bring CDFIs on board. We're always, optimizing to allocate the capital in a way that you're going to send this money tomorrow, they're going to be deployed the day after tomorrow, right? Because how the needs-based matching really works on our side. So there's definitely been a lot of interesting ideas there, but I would say fixed income and cash continues to be the space where CNote, I think we've been developing kind of like our brand and our reputation in the space, and I think also the impact data that we've been delivering to our investors really speaks for ourselves, and just that transparency of like that's exactly what you do. And if you want to go, you can like go and check your neighborhood and actually see where those projects are, because they are literally in your neighborhood, and we give you all this visibility and transparency.
Do you have any thoughts about the future of CDFIs with the changes that have been happening at the federal level? Do you think CDFIs are safe? Are they going to continue to thrive over the next few years?
Yeah, well, I think, I mean, I don't think anyone has a crystal ball. So like, I don't know if if I can tell you what's going to happen. I think the way we approach, current environment is, as we mentioned, CDFI is just a certification, right? There's tons of institutions out there. There's tons of organizations out there that do this work, but they just might not be certified as CDFIs. And there's definitely some interesting perks, right, that come by being a CDFI. And I think some of the organizations obviously get interested in that. And so, becoming a CDFI might bring you more grant opportunities and again, more opportunities to engage with, with local governments. But I think the approach we are taking is either CDFI certification is there or not. There's all these community organizations that have been doing this work for decades, and they're going to continue doing the work for decades because again, small business is going to continue to be the driver of the United States economy. Housing needs to be built, right? Schools needs to be built. The gaps needs to be closed. And so, we could call them whatever we want, but I think again, the work is going to continue, and the funding for that work needs to continue. And so again, even in our offering, I mean, we do talk about community finance organization with that intention that it could be CDFIs, it could be something else, but the intention is actually to drive the capital to the communities.
Yes. Yeah, it's such a win-win what you're doing because community financial organizations, whether they're CDFI certified or not, need capital. I mean, they know how to deploy it, they have those relationships. And so you are creating this new stream of funding for them. And, it's a great way for a place for people to put their cash where they can really have a positive impact. So, given that one of our themes, CFPA's themes for the year is potential partnerships between the crowdfunding world and the CDFI world, or maybe we want to broaden it to community financial organizations. Do you have any other ideas of how those two worlds can intersect with each other? We do have a couple questions. One person asked about, you know, would a CDFI ever want to use Reg CF instead of Reg A? You can only raise up to 5 million at this point, but any thoughts on that? Any other, you're obviously very creative, so any other creative ideas of how we can continue to be working together?
Yeah, I have to admit I haven't been up to date on Rec CF, so I don't know if I would be able to comment on that. I mean, happy to take that offline and have this conversation if someone has an idea and just to see how, based on what we know, based on our work with CDFIs, how it could land. We're always open to those brainstorming conversations. I also see the question about debt versus equity. I would love to bring more equity to CDFIs. I think it really takes again another kind of like the design process to figure out who's going to buy that equity product and what is the market out there, who is right, what the expectations for that equity, what type of results we can create. I think when we started and why we kind of like started with that is because it felt like a nice step up from someone doing donations to CDFIs and kind of like understanding what they do to now a little bit higher. It's like, okay, well, there's like obviously a little bit of risk because it's an investment, but also, the whole history of CDFIs, their incredible low level of defaults. And, even though CDFIs are not rated, but, we have tons of data to support that if they would be rated, they would be like AAA or like, AA plus. And so like that allows us to create kind of like that product that even without being rated has very strong credit quality, and then we can demand a certain type of return. And again, it could really nicely fit in your portfolio, especially as for non-accredited investors, right? When we talk about equity investing, equity investment, right? It's about, okay, like, well, who's going to invest in, who is willing to invest in, who understands CDFIs, right, well enough to commit to that. where in your investment for portfolio that product would fit, right? So you kind of like start putting that investment management, my CFA hat on, my CFA charter holder. I was like, how am I going to, talk about this to the clients and explain to them, and again, how big that market is. And we do, as I mentioned, like we do work with individual investors. We also work with institutional investors. And so some institutional investors might be more open to go into that, right? Because again, they have more different pools of capital to play with, and they might want to get more experimental, right, with certain capital. And that's also the work that we can be doing with them, again, given all their experience in the data and behavior monitoring, right, that we've done over the last 10 years by working with CDFIs and with investors investing in CDFIs.
Yeah, and as you pointed out, there is an association of CDFIs that are VC style funds. It's what is it called? It's like the National Venture Capital Community Development Venture Capital Association, I think it's called. I have to admit that I am a little frustrated because from what I can tell, um, most of the folks who do equity investing that out of CDFIs, they often use the venture capital model, which is not a fit for the vast majority of businesses. And so I would love to see more CDFIs that are doing equity investment looking at alternative forms of equity like revenue-based equity, equity with a structured exit so that you don't have to, sell your business in order for your investors to exit. And oftentimes those types of equity can be a little bit lower risk because they're based on the business becoming profitable. They're not based on that 1 in a million chance that there's going to be some big exit through an acquisition. So
Yeah.
there's lots of room for innovation.
Yeah, for sure. And I think I would have to share, there's one CDFI that we work pretty closely. It's ICA fund, and they're out of Oakland. They, I think, has been very much a pioneer of really interesting ideas and not afraid to experiment in this like VC space. And they are VC fund. And they can take both, equity and debt, and they could do equity and debt, but I've been really impressed, and also it's been like really fun watching their journey on pushing the limits on, again, what different type of investments could be done by a CDFI.
Yeah. Yeah, so I just urge everyone, there's some people that have been in that world of angel investing and VC investing where to them the term equity investment is synonymous with that type of investment where the only way you can get paid is if there's a big liquidity event. That there's many other types of equity investment. So one of my big things that I like to remind people of is don't assume that all equity investment has to have that same structure. Um,
Yeah.
so we're getting towards the end, and let's see one thing I really wanted to mention is that right now, Crowdfunding Professional Association is doing a lot of advocacy about the laws governing crowdfunding, and also advocating for a tax credit for crowdfunding investors. And so some people asked about the cost to do a Reg A offering. Yuliya didn't remember, and things have changed since they did their first offering. But, from what I understand, it's probably in the range of 50 to 100,000 in terms of all the different costs. And, we are advocating to try to bring some of those costs down, both on the Reg A side and the Reg CF side. So what we really need everyone on this call who cares about that to do it to join Crowdfunding Professional Association, because the more members we have, the more we can show the legislators and the Securities and Exchange Commission how big of a movement we are growing. So our community coordinator just put the link in the chat to join. It's very affordable. It's just $10 a month. So please join. And if once you join, you can get involved in a lot of our members only activities, including kind of getting on the inside of some of the lobbying efforts we're doing, which is very fun and interesting. Yeah, and we will also we send out calls to action where you can contact your legislator to talk to them about the changes we need to see in these laws. And this is a really good time to be advocating for this because the current administration and legislature are very supportive of increasing access to capital for small businesses and also opening up investment opportunities to retail investors, which are two sides of the same coin. So I will leave it there. Is there anything else you want to add, Yuliya? We should definitely put your website in the chat. I hope folks will consider looking at CNote as a place to park your money. I'm obviously not an investment advisor, but I've heard nothing but good things from those who have invested. So yes, tell us more, Yuliya.
Yeah, and I will, I shared the link, and then I will also, leave my my email number, my voicemail, my email, address, sorry. My email address, and yeah, and I would really, I was really serious. We love brainstorming, we love sharing, we're very passionate about giving access to CDFIs to as many opportunities as possible, and also educating investors about this segment. And we really think it could be considered like as a new asset class, and that's how I like to talk about it. I think CDFIs is a new asset class that just like no one tapped into. And so finding the way to package it, quote unquote, right, using like a traditional finance term and present it to investors for investment opportunities, that's again, something that I'm super passionate about personally. And so if anyone wants to brainstorm or would like to learn more, so they can leverage that experience and for their own projects, we would love to share, because they definitely need more capital, and anything and everything counts.
All right. Thank you so much, everyone, for joining, and we will be sending out the recording.
Wonderful.
Bye.